Hey guys, and welcome back to my channel. We're passionate about helping people with business and accounting. In this video, I want to talk about the Economic Injury Disaster Loan, also known as the EIDL loan, and how you can spend these funds. So if you're interested, keep on watching. Now, before I jump into how you should spend these funds, I want to clear up something real quick. There's a big difference between the Economic Injury Disaster Loan and the Economic Injury Disaster Advance. So the loan is a loan. You have to sign a promissory note and you will have terms associated with the loan. Unlike the PPP, the EIDL does not have any sort of forgiveness associated with it. So it is a loan, and it's a loan that will not be forgivable. The advance was designed to provide economic relief for businesses that were suffering from revenue loss. So most employers received about $1,000 per employee up to $10,000. There were no promissory notes. That money just really appeared in people's business accounts. The advance does not have to be repaid. However, if you took out a PPP loan, that advance will reduce your forgiveness amount. I have a video on that. Check out episode 22, PPP forgiveness, and we cover how all of that is calculated. Now, one thing I do want to mention is if you received the EIDL advance and not the actual loan, what you can spend the advance on is very similar to the loan. So keep that in mind. But for those of you who have already received your funds, let's talk about what your eligible expenses are. So this presentation was downloaded from the SBA website. So it gives us a little bit of information as to what is allowed. So for some businesses, how much can I borrow? So you can borrow up to $2 million. The interest rate for small businesses is 3.75%. and nonprofits 2.75%. The terms are 30 years, and all of this information should be outlined in your promissory note. Now, how can I use these funds? So you can use these funds for fixed debt, anything that is a normal working capital for your business. And I'll get into what you can't use it for in a minute. So you can use these loans for fixed debt, rent, utilities, payroll, accounts payable, and some bills that could have been paid had the disaster not occurred. Okay. Ineligible uses of this loan. So dividend and bonuses. So you can't pay yourself a bonus. You can't pay your staff a bonus. These funds cannot be used to issue dividends if you're a corporation. You cannot use them for disbursement to owners unless it's for performance of service. So if you're on payroll for your business and you receive a W-2, then you can absolutely use these funds for your payroll costs. So these funds cannot be used for repayment of stock, principal loans with exceptions, expansions of facilities, or acquisition of fixed assets. So this is a good one to talk about. Expansion of facilities. So you can't use these funds to go and rent out a bigger facility. And you can also not use these funds to purchase fixed assets. What's a fixed asset? So a fixed asset is a long-term tangible piece of property or equipment that a firm owns and uses in its operations to generate income. Fixed assets are not expected to be consumed or converted into cash within a year. Fixed assets most commonly appear on the balance sheet as property, plant, and equipment. Examples of fixed assets are vehicles for company use, office furniture, machinery, buildings, land. I mean, it really depends on your industry. Repair or replacement of physical damages. So let's say your company vehicle got into an accident and there's about $10,000 worth of damages that you have to get fixed. The funds of this loan will not be able to cover that expense. Refinancing long-term debt, paying down, including regular installment payments, or paying off loans provided or owned by another federal agency, including the SBA or SBA investment company. So you can't use these loans to refinance other long-term debt. Payment of any part of a direct federal debt, including SBA loans, except for IRS obligations. Relocation. So there are a few major concerns or questions that business owners have. The one that I have come across the most with clients is, can I use these funds to pay for our credit card debt? Credit card debt is considered revolving debt, so it's typically not long-term. It's going to depend on your situation, how long you've had the debt, and more importantly, what were the funds used for? So if you are in the situation where you use credit card debt to pay bills, to keep your business afloat, then you can use the EIDL funds to pay for that debt. If you incurred those expenses anytime between January and now, then you can use the EIDL funds to pay for that debt. So what happens if your EIDL funds were not enough and you would like to request more? It's my understanding that if you need to request an additional draw, that you will have to provide documentation. You have to show documentation of what the previous funds were used for. So you have to keep excellent records and reporting so you're able to show that you use the first draw according to the guidelines that were issued in the promissory note. Now, it's also my understanding that if you are unable to provide the documentation and support for the first draw, that they can potentially call your loan due. So the next thing I want to talk about is business enhancements. You cannot use the EIDL funds to purchase a brand new computer or to purchase a brand new car for your business. You want to think about it this way. Think about all of your ordinary expenses that you use for your business on a typical day-to-day. A great resource is run your P&L for last year and just take a look at all of your operating expenses. Those expenses should be an indicator of what you can use your EIDL funds for. So now let's talk about record keeping. You need to keep records for this loan. Now, the SBA requires that you keep books and records for the most recent 5 years until 3 years after the date of maturity, including extensions or the date the loan is paid in full, whichever occurs first. In addition, you will have to keep itemized receipts, paid invoices, or canceled checks and contracts for all loan funds spent. So I would recommend that you keep a separate report for all of your EIDL expenses and you attach it to a folder with all of the supporting documentation. That way, if there's a question down the road, it's easy to access that information with your report and be able to substantiate all of the loan funds. If you guys would like to see a tutorial on how to track your EIDL expenses in QuickBooks, give this video a big thumbs up. That way I know that's something you guys would like to see. So remember, the loan funds can be used for normal operating expenses. Pull that 2019 P&L, see what you spent money on, and try to stay around those expenses, and you should be fine as far as the use of funds. So I hope you found this video helpful. I hope it clarifies some of the questions that you have. If it doesn't, please leave a comment down below, and I will do my best to get back to you or even create a follow-up video to this one answering your questions. I hope you found this video helpful. If you did, please like and subscribe, share it with a friend, and I'll see you in the next one. Bye.